Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Monday, the 28th of April. Starting off with the S&P, which has managed to build on the gap that we had higher back on Wednesday, holding above that 51.60, and the target now, the 50-day line, up to 56.36. We haven't been above that since the fateful decline on the 21st of February. In terms of support, that gap top there, 53.70, the obvious place, but gap down to the gap floor down to 5300 has to be factored in as a potential place that the market might go for support. Moving on to the Nasdaq, and obviously here a similarly improving situation. Difference here is perhaps that we're a little bit nearer to the 50-day line there at 19,700. And maybe can also look at the former resistance there at 20,000, the big psychological number as well, while we're above the top of the latest gap there, 18,600. Moving on to the stocks, and starting off with a situation which we haven't looked at before, Arbits Group. Here you can see that we've got a bit of a turnaround, and looking for a turnaround within this falling trend channel, which has been in place since back in December. Top of the channel there, heading for around the $4.30 area. That's our initial target. While we're above the we can stay above the old support there from March, around $3, so above 3, looking for 4.30 there on Arbits Group. Moving along to the situation at Agriforce, and here looking stronger by the day in the sense that we had the gap through the 50-day moving average and had a sort of partial gap fill, which is normally a very good thing because it shows that the bulls have been able to get the stock back to filling the gap, or in this case the 50-day line at $1.47. Also had a bounce at RSI 60, which looks very strong as well. Initial target here, the top of that falling trend channel there, $2.77, which was also the post or pre-February resistance for the shares. Moving along to a stock which we used to look at quite a lot, but obviously it's fallen from grace, or did fall from grace. Current situation, though, is that it's a bear trap island reversal, so gapping down back in March and gapping up again now. Initial target here, the top of the gap and the 50-day moving average area at $4. Above that, the best case by the end of next month, up to $5.75. The top of that broadening triangle from the beginning of the year. BarFresh is next, and here see the shares gapping off the floor of that rising trend channel base. The floor there around $2.30. Above that, looking for at least the 50-day line, $3.28 over the next couple of weeks, and that's certainly valid while we're above the low of Friday around $2.50 on an end-of-day close basis. The next stock is one which I suppose if you're in it, you'll be laughing, but for the rest of us, probably crying that it's difficult to get on board. Current situation is that we retested, as we were expecting, retested the best levels of Thursday towards $39. Current situation is that there is an opportunity, if there is any dip towards the closing price of Thursday, towards $25, for long entries to be taken for a retest. Then, again, of the upper 30s. Moving along to a stock which we have looked at before, and it's back again. Here you can see that obviously the left-hand side of the chart rather nasty, but situation is that we're trying to bounce off the floor of this falling trend channel, and the key here is getting an end-of-day close above the 50-day line at 404. Above that, looking for the top of that falling trend channel at 580 by the end of next month. But I don't think we want to see any fresh new lows for the shares. A nice bounce for the RSI around the neutral 50 level might help the cause over the next few days. One of the stars of the show in the recent past has been EPWK, and here blowing the lights out all over the place. Initial target there around $6. Second one, which was rather ambitious, $10, guessing the upper parallel destination. Third target around the $13 level, which actually has been hit. What's interesting now is that if we can stay above the recent resistance line area around $10, then we could have a new leg to the upside. Best case would be up to $20 by the end of next month. Probably the easiest thing to say is while we're above 10. Ideally, we stay above 11, but that may be asking for a bit too much, even though pre-market we are at 12.76. Another good-looking situation is coming up in the form of Jaguar Health, and here we've got a rising trend channel base, but what the real sizzle here is the that U-shaped or saucer-shaped turnaround. I think it's called a scallop as well, but above the top of the gap, of the recent neckline resistance, and the bottom of the gap, rather, around $8.40, looking for up to $12 by the end of next month, especially given the way that we managed to close or push above the 50-day moving average, currently at $10.48. Stock which may not be quite as good as that one, but it's having a go, is China SXT. The problem here is the 50-day line at $3.02. So the obvious thing here is to either wait for dips towards $1.50, recent support, or wait for an end-of-day close through $3 to target then up to $6.40 at the top of that broadening triangle from back in January. On to the last two. First one is Simpple. And here, broken back above the 50-day line at $3.85. Looking for recent resistance around the $5.70 level, hopefully by the end of next month, while we hold recent support there at $3.25. The last stock is a new one to us urgently, and here, rising trend channel base, we've closed the gap around $6 at the $6.20 level. Above that, looking for up to $11 by the end of next month, and ideally we stay above that gap around the $6.20 area in the meantime. That's it for me today. More updates tomorrow.